Very good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. But before I continue, let me remind you that, like any other YouTube video, our YouTube video also having a dialog box, which is very next to the video. In this dialog box, you are having a paragraph, and paragraph is followed by a link. If you click on this link, then you will reach to the free groups by Treasury Consulting, which includes YouTube, Facebook, LinkedIn, Twitter, WhatsApp, Telegram, and all. And of course, I hope you understand that we already launched our fifth video course, which is Foreign Exchange Basic Series. If you want any information, you can definitely WhatsApp me 9818485155. From the last 2 weeks, I think, I was working on a project, and that project was ICICI versus HDFC for long term. And somehow I got a lot of data on Bloomberg and Reuters, and of course the public domain, their annual reports, and a lot of articles in the annual report. And now I got another data in newspaper. But before I speak, I'm feeling very happy. Very happy, guys. Because in this article, there is a heading called stress test. And I'm very happy because I'm pleased to inform you that one of the criteria of stress test is by GNPA, gross non-performing asset. And this is by Kotak Institutional Equities. A person speaks or do as per his or her knowledge. And after representing stress test in the terms of gross NPA, Kotak Institutional Equities proved that where exactly they stand. By the way, Kotak Mahindra balance sheet also having a lot of issues, which I pointed out in the public domain. So if I speak about HDFC and ICICI Bank, then that doesn't mean that I'm happy with their balance sheets. That's more important. I'm not at all happy with any balance sheet of any Indian private sector bank, and especially those who are audited by the Big Fours, because there are a lot of gaps they left in the balance sheet. And very soon we will have a detailed video in that regards. A lot of videos done already on our YouTube channels. And of course, I'm not a fan of Bloomberg. I'm not a fan of valuation as well. That's more important, because I feel that valuation is like a girlfriend, while who can come and go, or maybe boyfriend who can come and go. While intrinsic value is like a wife or a husband, a good wife and husband, whereby relationship is permanent. So I'm not a big fan of valuation, to be honest. And like 3 to 4 weeks ago, there was a story that Reliance Industries Limited valuation is some of, in fact, more than the valuation of all public sector undertakings we are having in India. Although we presented this story, but once again, we disregard valuation, because valuation is like a girlfriend or a boyfriend who keeps changing. So that's how. There is a news that HDFC Bank and ICICI Bank valuation is getting narrow, and it is at decade low. Now, decade low means that there used to be a very big gap between HDFC and ICICI, and now this gap is very low, to be honest. Like there is a data that the price, basically percentage of difference, sorry, my mistake. I can say that, let me put that way, the valuation premium was 4.2 times in fiscal year 2010 of HDFC, and now it is 2.7 times, which means it has reduced by around 50%. While for ICICI, it was around 2.1, and it is more or less same. It is 2 now. So if I go 10 years ago, The valuation premium of HDFC was 4.1, while ICICI is 2.1, which precisely means 100%. While this time it is 2.7 versus 2 of ICICI, which means the difference is only 37%. The biggest question is that barometer can be taken to decide we are investing in ICICI Bank for long term? That's a tricky question. Very, very tricky and technical question. And very important thing is that in fiscal year 9, HDFC Bank retail asset was 61.8% of total loans. And now it is around 47%. While ICICI was 48.6% in 2009 and now it is 63.2%, which means ICICI Bank is scoring well even in that regards as well. If I go with the so-called Kotak Institutional, then in terms of gross NPA, which I always disregarded, in fiscal year 20, it was 1.3% for HDFC. Estimated for 21 is 1.8 and 22 is 2, while for ICICI it is 5.8, for 21 is 5.7 and 22 is 5.4. So on a gross NPA basis, HDFC is doing decent compared to ICICI. But anyways, that is one thing. Although none of the Indian private sector banks is showing the disclosure the way it should be, but I strongly feel that as Treasury Consulting Group hedge fund desk love to go ahead with ICICI than HDFC. And there are various reasons in that regard. But of course, before I spell out the reason, I would like to make myself very clear that the continuous research is required. So at any given point of time, any market movement can change that decision. That's more important. I feel that ICICI Bank is having great potential of investment by private equity and several sovereign wealth fund. I think they did it earlier and maybe they do it. They may choose to do it again compared to HDFC. I think that ICICI retail asset balance sheet is in a position whereby they can extend retail asset as a percentage of total loan closer to 70% compared to HDFC. More importantly, ICICI Bank portfolio is having a lot of other entities like ICICI Insurance and ICICI Lombard, and there are so many companies which will help ICICI as a brand. Should not forget ICICI Mutual Fund. That's more important. ICICI Mutual Fund is to an extent at par with HDFC Mutual Fund, but not listed. That's a separate thing. We also expect that probably in near future, ICICI may go ahead and list ICICI Potential Mutual Fund, which will not only increase the valuation of ICICI as a brand, which is definitely not the case with HDFC because HDFC AMC is already listed. Simple. So HDFC AMC is listed as a group. It is valuation is already adjusted, but for ICICI it is not yet listed. So there is a probability that it can list because specifically for UTI, like first is for HDFC, then Nippon, then UTI. Then I think the trend is slowly emerging up when all AMCs will list, just like US. In US, majority of the AMCs, asset management companies, those who are offering similar kind of services, they are listed, right? So there's nothing wrong. And of course, I look at the balance sheet of both the banks, which are available on their website, and I strongly feel that Treasury Consulting will definitely love to enter in ICICI than HDFC. Of course, capital churning is in the favor of ICICI than HDFC. We are already long in ICICI, around 330. Presently, as I speak, it is around 400, which is, I think, 20% premium to our customers, clients. We, after getting this data and other data which you got from financial terminals plus the public domain, we have made a mindset that we will continue with ICICI Bank. But having said that, we have to make one thing very clear and specific, that it is markets and anything can happen. Indian operators are very powerful and they can do anything. They know they do not go as per the law. They disregard all laws. That's more important. We are consistently following up ICICI and HDFC and of course the Kotak Mahindra Bank. As of now, I feel that Kotak Mahindra Bank is relatively very expensive in multiple terms, but I think ICICI Bank is in affordable range and a good bank. Our price target to ICICI is 500 by March 21, provided there are few parameters which they meet, and these parameters are only for clients, not for public domain. But I think that ICICI Bank having potential, and especially after getting this data, which is that their valuation matrices are improving compared to HDFC Bank. That's more important. And of course, Basel 3 is on the cards. And Basel 3 is the testing parameter for every Indian private sector bank. And it's really difficult to predict who will win, who will not, but it's not going to be an easy game. This is what about HDFC versus ICICI Bank, and we as a desk is going ahead with ICICI Bank. This is Rahul from Treasury Consulting. You know our WhatsApp 9818485155. In case you have any questions about our paid programs, about our hedge fund desk, about our Android app, Apple app, or anything, do let us know, sir. Have a great time.